as de-dollarization of the international economy is gaining momentum. This is spearheaded by powerful countries like China and Russia. At the recent state visits by Chinese President Xi Jinping in Russia, President Vladimir Putin indicated that they are in favor of using Chinese currency for trade in other parts of the world, like Africa, Asia, and Latin America.
We should prepare to lose our position as holder of the world's reserve currency. That is happening in slow motion. It's unmistakable.
What if I told you that the world's most powerful currency, the almighty dollar, is teetering on the edge of collapse? For decades, the United States dollar has reigned supreme as the global reserve currency, providing stability and trust in uncertain times. However, recent developments have cast doubt on its unchallenged reign. Is the dollar's throne starting to crumble? Are we witnessing the slow erosion of its status as the safe haven for the world's wealth? We'll address these burning questions and more, shedding light on the intricate web of global finance. Get ready to challenge assumptions, examine the evidence, and uncover the precarious state of the world's most iconic currency, the dollar. Let's dive in. But before we continue, we would like you guys to subscribe to the channel, like this video, and hit the notification bell icon so you do not miss out on any amazing and entertaining content. Last year, the dollar was sitting on the throne, crushing its rivals like gold, the Swiss franc, Japanese yen, and even Bitcoin. Things were looking up for the US dollar as the US Federal Reserve hiked up interest rates to combat inflation. This move attracted overseas investors who were hungry for higher returns. As a result, the dollar reached a 20-year high, solidifying its position as the ultimate safe haven. But as the saying goes, all good things must come to an end. As September approached, the sentiment shifted. Instead of seeking refuge, investors began eagerly anticipating the day when the Federal Reserve would declare victory in the war against inflation and start slashing interest rates. Now, you might be wondering, why would falling interest rates be a game changer? Lower interest rates meant that global stock markets would experience a turbocharged boost, as investors would once again embrace risk and abandon bonds. It was like a countdown to this pivotal moment. And right on cue, the US dollar index, a measure of the dollar's value against a weighted basket of major currencies, crashed. It plummeted by a whopping 10% from the highs it had reached previously. The dollar did manage to stage a brief rally during the banking crisis when investors were gripped with fear over another potential banking meltdown. But that was short-lived, and the greenback has been sliding again in recent days. A decline in the value of the dollar could actually benefit commodities like oil and gold. As these commodities are priced in dollars, a weaker dollar would make them cheaper for buyers using other currencies. This could potentially lead to increased demand for these commodities and provide a boost to economies heavily reliant on their exports, such as Brazil and Mexico. However, this situation must be approached with caution, especially in light of the challenges posed by the strong dollar. The increased cost of servicing debts denominated in dollars has been a significant hurdle for emerging markets. If the dollar continues to weaken, these debts may become more manageable, providing some relief. Additionally, as emerging market currencies strengthen against the dollar, inflation rates in these countries could potentially decrease. While currency values fluctuate regularly, the dollar now faces a significant long-term challenge to its status as the world's reserve currency. Various countries, including Russia and China, are seeking to reduce the dominance of the dollar. In fact, there have been proposals for a common trading currency for East Asia pegged to gold. The dollar's reserve currency status not only brings economic strength, but also grants the United States political power. The U.S. has demonstrated its willingness to use this power by imposing sanctions on countries like Russia. These actions, often referred to as dollar weaponization, have caused concerns and led some countries, such as India and China, to explore alternative currencies like the rupee and yuan for trade with sanctioned nations. The shift away from the dollar as a reserve currency is evident in the decline of its global currency reserves. According to the International Monetary Fund, the share of global currency reserves held in dollars has fallen from nearly 3/4 at the start of the millennium to 59% today, and this downward trend is expected to continue. The potential consequences of a weaker dollar extend beyond economic implications. They carry geopolitical significance, as the international trading order could experience a process of de-dollarization. The concentration of power in global currency markets has sparked conversations and concerns among several countries. Many are calling for a more diverse landscape to address the issue. One example of this trend is the growing trade relationship between Brazil and China. Their transactions are increasingly being conducted in yuan, which is helping to establish the Chinese renminbi as an international currency. This development has the potential to challenge the dominance of the dollar, particularly in the realm of commodities. The pricing of commodities in dollars poses challenges for countries that rely on these imports. When the value of the greenback rises, essentials like oil become more expensive, leaving commodity importers vulnerable to exchange rate fluctuations. To mitigate this volatility, countries such as China and Russia are actively fostering closer economic ties, aiming for a more stable exchange rate. The appeal of the yuan grows stronger as a result. Notably, some experts suggest that the introduction of the petro-yuan could have a substantial impact on the dollar's dominance. This move away from the dollar as the primary currency for energy trading is not limited to emerging economies alone. Even G10 nations are exploring alternatives to protect themselves against a potential surge in the dollar's value and concerns regarding the U.S. debt ceiling. This diversification of currencies signals a shift in the global financial landscape. While reports of the dollar's demise have circulated for decades, the U.S. currency still holds a predominant position in global trade, accounting for almost 90% of foreign exchange transactions. However, the upcoming years may bring changes as China's GDP is projected to surpass that of the United States by 2030. This projected shift in economic power highlights the potential for a fundamental transformation in the global currency hierarchy. The consequences of the dollar losing its reserve currency status to the yuan would be significant. A decline in demand for the greenback would lead to a decrease in its value, benefiting rival currencies like the euro. The United States would face challenges, including surging borrowing costs as demand for its government bonds diminishes. Moreover, the country's substantial debt burden would grow rapidly, posing additional difficulties. Beyond the economic implications, such a shift would have substantial political ramifications. China would emerge as a dominant global force, directly challenging the long-standing hegemony of the United States. It is important to recognize that the strength of the U.S. dollar is derived from multiple factors, including economic wealth, political stability, military might, adherence to the rule of law, protection of property rights, and a sophisticated financial system. These foundational aspects will not disappear overnight. Currently, the yuan represents a relatively small share, approximately 7% of global foreign exchange transactions. However, this share is growing rapidly as China's influence and power continue to expand. More countries may be inclined to shift towards using yuan in their international transactions. This gradual transformation aligns with China's aspirations for the yuan to play a more prominent role on the global stage, while King Dollar is far from losing its crown at present. After a century of unrivaled dominance, it finally faces a serious challenge to its power. The evolving global financial landscape, coupled with China's rise, sets the stage for potential shifts in currency dynamics in the future. While the dollar's reign is still strong, the coming years will be crucial in determining the future balance of power. We hope you found this video insightful and informative. If you enjoyed this content, make sure to give this video a thumbs up and subscribe to our channel for more in-depth analysis of global economics and finance. Do you think the dollar will lose its status as the reserve currency of the world? Let us know in the comments below. Thank you for watching, and we'll see you in the next video.